Well, I want to ask you this because you put up several tweets, and I want to go back that you put up recently. So the stock market is collapsing as well. Like, and one of the things we're seeing, I mean, initially, so like I remember like 4 years ago, very much, maybe as early as or 3 years ago, 4 years ago, Bitcoin was very much tied to the stock market. If the stocks went down, Bitcoin went down. And now we're seeing that Bitcoin is way more decoupled from that. Here's your tweet. And so this is like Bitcoin hit 500,000 on upcoming stocks and gold crash, Max Keiser. And then there was another, I think someone else put, I forgot, I missed it. But the stock market has not been doing well, and yet Bitcoin now, as we just discussed, has just crossed over 54,000, and it did it quite quickly. It was at 51,000 like early this morning, and now it's at 54. So explain to the audience why Bitcoin is like not that attached to the stock market anymore.
Well, the stock market is doing well. I mean, the stock market hit new all-time highs. And the stock market, the S&P 500, the NASDAQ, Dow Jones, they're all doing very well. On the back of 7 tech stocks that are the Magnificent Seven, you have this company, NVIDIA, that just crossed over into $2 trillion market capitalization. It's been a huge, huge winner. And so, but in Bitcoin terms, if you were to price the stock market in Bitcoin, or if you were to price gold in Bitcoin, it would look like it's going down. Right. So you have to, it depends what your denominator is, right? So Bitcoin as denominator makes everything else look like it's not doing very well. And so in that sense, but in the absolute sense, the market is doing high. What I'm saying is that the market's setting itself up for a 1987 style crash. And for example, that concentration of stocks, the top 7 stocks, they now comprise something like 10% of the entire market capitalization of the entire market. And the last time we've seen that level of concentration is 1929. So almost 100 years ago, 1929, the famous market crash that happened in 1929. So this is really 1987 or 1929 level over concentration in the market. And to your point about correlation with Bitcoin, Bitcoin's never been correlated to the stock market. It's never been correlated to anything. Bitcoin is on its own vector. It has been since day one. If you look at the trajectory of Bitcoin from 10 cents to 55,000, that's on its own trajectory. There's nothing comes close. Everything priced in Bitcoin looks like it's dead or dying. So there's no correlation, not priced in Bitcoin. And since we're moving into a global Bitcoin standard, you got to use Bitcoin as your denominator and see that it doesn't, nothing correlates to Bitcoin. So there's never been a correlation with anything. It's on its own vector, and it'll continue to pull away from everything. And getting back to Michael Saylor for a second, so he's got almost 210,000 Bitcoin. So that would be 1% of the entire Bitcoin network. He's in the 1% club, or will soon be. So if Bitcoin gobbles up the global total addressable market of $400 trillion and Michael Saylor has at least 1%, that means Michael Saylor could be worth $4 trillion at some point. Now, that's interesting because just last week we learned that Bill Gates, CEO of Microsoft, if he held on to his Microsoft stock and instead, but he had a conversation with Warren Buffett, who convinced him to diversify out of his Microsoft stock 25 years ago. If he did not diversify out of his Microsoft stock, Bill Gates today would be worth $1.3 trillion, which is a remarkable number. So this idea of a trillionaire is already kind of with us. It could have been Bill Gates, but he sold his Microsoft stock. And I'm sure that Steve Jobs probably at one point had enough stock to qualify in that club as well, or come very close to it. So the idea of an individual like Michael Saylor becoming a trillionaire or a multi-trillionaire based on his Bitcoin position over the next 10 to 15 years, I think is in play.
God, diversifying actually, kills your performance if you look at it, because Bill Gates is worth like $140 billion instead of close to 1.3 trillion. So had he just stayed concentrated in Microsoft, he would have been much wealthier than he already is.
Yeah, well, that's fascinating. I mean, that shows you the power again of Bitcoin and why it makes hearing the Bill Gates story, it makes even more sense why Michael Saylor has gone like all in Bitcoin. But I want to touch on more the how you see if we have a 1987 style crash, or when this happens. It's not if, it's when. How do you see that affecting America in terms of financially and just like average everyday citizens? And then how would you see that affect the Bitcoin price in the short run and the long run?
Well, Bitcoin is a risk-off asset. It always has been. People consider it a risk-on asset. That's false. They see Bitcoin as a speculative asset. That's false. Bitcoin is a safe haven. Always has been. It's risk-off. So as these other risky assets implode, there'll be a mad rush into Bitcoin as a safe haven. And I think that's what we're seeing right now. People are, I mean, when Nancy Pelosi finally, has a loser in her options portfolio, she'll be running into Bitcoin as a safe haven, but she's got a hot hand.
But you might also, if you remember the 2009 crash, that really started in 2008, but the big crash happened in 2009, right? Or was it 2008?
Yeah, that period, 24 months.
There was a period of in September, October, when all the stocks were crashing big time. And if you remember then, what also sold off was gold. And gold sold off before then going to new all-time highs. It rocketed after the huge sell-off. And the reason why it sold off is because gold is a highly, highly liquid market, and there's always a buyer there. So when there was a liquidity crisis and the markets were crashing and people had margin calls, and margin calls were backed by illiquid stocks, and they couldn't, that had become illiquid during the financial crisis, they had to sell their gold. They had no choice but to sell their gold because that was the only thing that was liquid. So they sold their gold and the price crashed by, 15%. But then it soared by like 60%, say. I don't know what the numbers are, but it did soar after it crashed. The same thing could happen to Bitcoin if now you do have institutional investors and bigger players who have large holdings of Bitcoin. That will always have a market that will always be liquid. It won't seize up like the stock market could. And if they're getting margin calls and they can't make the margin calls, they'll have to sell what they can, and what they can will always be Bitcoin. That will always be liquid, and there's a global market for it. So that could be something that you see selling off, but it will only be temporary in order to make these margin calls. So if you see that, then that's an opportunity, a once in a lifetime opportunity, because at that time, I think gold sold off at that time. It was like to $700 or $800, and then it went up to close to 2,000. It went over 1,800.
Yeah, the story with gold is interesting, and Bitcoin. And to Stacey's point, it is the second most actively traded commodity in the world. It became the go-to settlement currency during the 2008 financial crisis. So you saw a drawdown in the price of gold. But what's interesting is look at the ETF market right now. So the gold ETF market, I believe, is in a roughly $90 billion range. And the new Bitcoin ETF market is roughly in the $27 to $30 billion range. And it's just in the few weeks that it's gotten almost a third of the market capitalization of the gold ETF. So I think you put pencil to paper, you extrapolate a little bit, and when next 6 months, we're going to see a flippening. We'll see the ETF and Bitcoin have a greater market capitalization, the combined ETFs, than gold. And that's going to be a very important signal to the market that gold is being demonetized by Bitcoin. This is an idea that 5 years ago was considered absolute heresy. I mean, absolute nonsense, that no way would Bitcoin ever demonetize gold. But you're seeing this play out right now in real time. Look at the price of gold today. It's absolutely dead. It's asleep. Nobody's trading gold. The volumes are drying up. The liquidity isn't there. They're buying Bitcoin because it's a superior form of gold. It's perfect money. Gold will never compete with Bitcoin. Gold's becoming the poor man's Bitcoin. It's something that might be available if you can't find Bitcoin. You'll be like, I'll settle for gold. I'll have to buy some gold because inflation's running rampant. Nobody will sell me any Bitcoin. I need an inflation hedge. I've got to settle for gold. That might be the only saving grace for gold. If people can't find or buy or source Bitcoin, they might turn and buy Bitcoin's little crazy brother, gold bullion. But So this is demonetization of gold is a huge story. Now gold's worth $14 trillion market cap worldwide. Bitcoin just went over $1 trillion. So just to get to gold's market cap, that's a 14x right there. So 50,000 times 14, 55,000 times 14, do the math. That's already now, almost $750,000 per Bitcoin, $800,000 per Bitcoin. That's a 2-foot putt, to use another golf metaphor. To use a golf metaphor more appropriately in context, in a way that's understandable by people listening to this. Okay, that's an acceptable metaphor. That actually works in that sentence.